Tomorrow morning, Tesla releases their Q1 2024 delivery number, and boy, do I have a warning for you. This is not necessarily warning you that Tesla stock is about to crash even further, but the number tomorrow is going to be a rough one. I think some context behind this makes a lot of sense, and that's what I will do here in this video. What my expectations are for Tesla stock. Do I think Tesla's going to fall? Do I think Tesla stock's going to rise? What happens if we get a really bad number? What happens if we get a good number? I'll tell you, expectations are low, so it wouldn't surprise me if Tesla does kind of beat the average estimate. But the real problem is Tesla produced about 420 to 425,000 vehicles in Q1. So for them to really come in higher than that, that means they would have had to sell vehicles out of their existing inventory, which Tesla has done that before, but that is leading to pretty low estimates from individuals like Troy Teslike at 409,000, Wall Street general consensus around 431,000. These estimates have fallen a lot, so has Tesla stock, and you can make the argument that you're already priced for a really bad number. So with that said, the work is cut out for us here in this video. Hit the like button as well as subscribe to the channel because it's my birthday and it's free 99. It costs you absolutely nothing to do so. So again, like I said, expectations are low. Wall Street's at about 431,000. Troy Teslike at about 409,000. I think Wall Street's pretty prepared for like a 420,000 number. If you come in around 410,000, that year over year comparison, last quarter in 2023 for Q1, or last year's quarter in 2023 for Q1, was about 423,000 deliveries. So 410,000 or less would be quite a rough number. If we come in higher than 431,000, that would be fantastic news, and I would expect a big day tomorrow to the upside for Tesla stock. But again, it's important to remember Tesla is the worst performing stock in the S&P 500 in 2024. And why is that? Well, this number that we're going to get tomorrow is expected to be really bad. You've already priced that in. And honestly, I will be quite surprised if Tesla sells off tomorrow in any kind of meaningful way. Actually, it wouldn't surprise me to see Tesla stock rally tomorrow, even though you come in at, let's say, 425,000 deliveries. Okay, but I really want to show you guys this before we get into the rest of this video. Throughout this video, we are going to talk about why I believe Tesla is going to focus more on profitability, why the markets will likely give Tesla a pass for the weaker than expected, most likely, delivery number coming out tomorrow. But take a look at this. A couple different reasons that could fuel Tesla taking less of an approach of cutting prices to raise demand. Look at FSD, full self-driving Google Trends data. This is an all-time chart for FSD. You are exploding higher. This is going to be very accretive to bottom line profitability. But you're also seeing such a fantastic initial, what I would call halo effect, based on the Cybertruck, or based from the Cybertruck, that maybe the Cybertruck itself is giving Tesla the demand they would have otherwise had to cut prices for to see. So in other words, maybe Tesla's demand's being helped out by the Cybertruck. That means Tesla doesn't need to cut prices. Take a look at this. This search trend activity is the strongest that you have seen since years, right? This has not happened in many years for Tesla. And especially not during this time of the year would you expect to see trends like this. And I mean, I can only imagine what Tesla's order book looks like for Q2 right now. So recently, you've went from 38 on the Model Y, or Model 3, to 39 on the Model 3. The Model Y has went from 38 to 40, but look at the Cybertruck, going from 38 to 44. Give me a break. That's crazy. Crazy. The Cybertruck seems to be leading the Model 3, the Model Y, the Model S, and the Model X higher. Again, not to mention the Model X recently going from 9 to where it is today at 11, which is very high. The Model S recently going from 11 to 14, which is very high for the Model S. Across the board, you're seeing a lot more people searching about Teslas or searching for Teslas, presumably. So I did want to kind of come back to the beginning of this video to share this with you because I do think this can offset, again, Tesla needing to cut prices to boost demand. Now, who knows what demand's going to look like? But maybe this does help out enough. Tesla doesn't need to cut prices anymore. Thus, Tesla can focus on profitability and growing margins, which is ultimately what is going to drive Tesla stock higher. It's not deliveries. Tesla has been doing just fine in deliveries for the past 2-3 years. Tesla has grown deliveries a lot since the stock was at all-time highs, like 300% or some crazy number on a kind of year after year after year basis since 2020, 2021. Tesla's profitability, that's the issue. So if Tesla just said, yeah, we're not going to focus on unit volumes anymore, but we're going to focus on profitability, that would likely mean Tesla stock going into the 300s again. But with that said, let's continue on. Let's be honest, Tesla is the worst performing stock in the S&P 500 in 2024. We really haven't got much of anything for bad news in 2024. Some people imply, of course, Tesla reducing the average workday for Chinese employees is negative for production, blah, 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 blah. You've gotten a little bit of perceived bad news, but with a almost 30% drop in 2024, all of that is likely priced in plus some. Think about it like this. Take NVIDIA for an example. NVIDIA is priced for perfection. NVIDIA is priced as if they're going to continue to smash earnings for years to come. Whether or not that happens, fine. Doesn't matter. If NVIDIA were to come out next quarter and miss earnings, everyone's caught off sides because expectations were even higher than perceived reality. Tesla is different. Expectations are down here, but people are like, Tesla's just going to keep doing worse and worse and worse. So the actual expectations are like super, super, super bearish. Whereas you could reasonably say a bad number is likely already priced into the stock. But let me tell you right now, and I'm probably the first one to tell you this. If you haven't heard it already, I might blow your mind. But Tesla's focusing more on profitability. I've said this before here on the channel, but I will reiterate yet again, Tesla just raised prices of the Model Y in the US. Let's think about this quite logically. Like, let's be very simple about this. If Tesla is really going to miss analyst consensus for deliveries for Q1 by a lot, potentially 431,000 being the estimate, wouldn't Tesla cut prices to spur demand? Wouldn't that be Tesla's next move, not raising prices? And sure, some people like the bears will say Tesla was trying to pull forward demand into Q1. Bullshit. That's not what's going on. Tesla is focusing more on profitability. First step of that was Tesla not giving full year guidance. I talked about that before. Step number 2 is Tesla starting to incrementally raise prices. Step number 3 was reducing the Chinese work week from 6.5 days to 5 days. Sure, maybe that does take a hit to production, but if Tesla's focusing more on profitability and those factories are running full tilt, then that should really be a net positive for Tesla. And I believe Elon made the best decision there. And people trying to question Elon really doesn't make sense to me. Like, let Tesla do what Tesla is going to do. Topic for another video. And the last thing is Tesla doing a rollout of FSD in the free trial that just recently started. That is almost 100% accretive to the bottom line. All of these things are reasons why I believe Tesla is focusing more on profitability now. Let me kind of shock you or blow your mind a little bit. Think about this. What if Tesla gives us a delivery number tomorrow, but they say we are no longer focused on growth on the unit volume, but we're going to focus on per car profitability? I'm not saying Tesla's going to do that tomorrow in their statement, but it wouldn't shock me if Tesla says that basically telling investors, forget about what we're delivering quarter by quarter by quarter, we're going to become more profitable. Now, I'm actually expecting this to happen on Tesla's earnings. I think Tesla's going to make it very clear they're focusing more on profitability. And again, all of those signs are pointing towards that. If I'm wrong on reading the tea leaves here, I will be utterly shocked. And this is something that nobody is expecting on Wall Street. Judging off of EPS estimates for 2024, decreasing over 50% within the last 6 months. Expectations are bottom of the barrel for Tesla, plus some. So if I'm correct, that means Tesla stock most certainly is going above $200 pretty soon. But again, I want to be very clear. I don't know if Tesla's going to announce that on the statement itself. It would be kind of out of character by Tesla, but judging off of, let's say we get a 410,000 number, estimates are way higher than that. To offset what could happen to Tesla stock, maybe throwing a statement in there like that could make some sense. Again, I'm not expecting it tomorrow, but it wouldn't surprise me if it happened tomorrow. I think the real fireworks for Tesla are going to be on Tesla's earnings. And honestly, I'm starting to expect a huge rally after those earnings. With that said, I do think it's also important to acknowledge that Tesla's stock is down almost 2% today. So that kind of is like the last ditch drop. And that's pricing in, you know, that bad report coming tomorrow, essentially. For an example, if Tesla stock was up 2% or 3% today, you have less of a cushion for bad news coming tomorrow. So the fact that you are down 2% today actually means you're probably better priced for a bad number tomorrow. I think on a technical basis, you definitely want to be watching this setup right here. If you did not have this on your chart, I would just chart exactly what my chart looks like, and I'll blow it up to make it a little bit easier for most people to see. But you're basically connecting this gap fill from January, the low end of the gap where these 3 wicks are. You're connecting that to this low that you've seen back on April 27th of 2023, connecting it almost to the low here and just drawing a trend line from there, right? This chart has served very accurate in Tesla's technicals. You had this bear flag channel that, you know, you were going up, no gap ups though. And then what happened? You break this down line and you gap down big time. You've kind of got a similar channel going again. So if tomorrow is negative and the markets take that as negative, maybe you come in, you know, 380,000 deliveries or something that would really kind of, you know, say, wow, that's a rough number. Then you could be looking at a gap down coming tomorrow. And I think you would have to be sub 400,000 to really see a gap down like, you know, that like a 5 to 10% move down. Could send you down though to the low side of about $159 per share. But notice today you found support here. You fell to a low of about 170, found support at 170, but you also found support at this trend line with Tesla retracing back to the upside. Now you're in this very kind of narrow channel here. If you break out above about 176, you set yourself up for upside to about 188. And it wouldn't surprise me if you do see quite a big green day tomorrow, especially if Tesla comes in line with estimates. Just judging off of the technicals, tomorrow is going to be a huge day for Tesla. If you break down, that's bad, right? You're going down to 160, high 150s. If you break up, potentially as high as the, 188 level. And again, if we did get some kind of good news, maybe on the statement itself that Tesla's no longer focusing on growing unit volumes, but focusing on profitability, maybe to offset a really bad delivery number, it's possible. It would make sense for Tesla to do that at this point. Then you could see a move well into the 200s, maybe in the 210 range coming over the next couple of days. That's not my base case. That is my base case for Tesla's earnings, but not for tomorrow. But again, it is a possibility. I think one of the bigger problems for Tesla stock right now is the broad markets. Now, we had this data come out today that is manufacturing PMIs. Now, this showed that manufacturing is starting to grow again. And with it is the prices for manufacturing projects. Prices beat expectations big time today of about 52.5. The number came in at 55.8. That was a big beat on prices. This did something very interesting. For the first time ever, essentially, is you actually briefly priced in the odds of a rate hike in June. Now it's no longer saying that. Now there is a slight chance of 2 rate cuts by June. But earlier in the day today, there was actually a chance, about a 0.5% chance, by the markets being priced in, that you actually get a rate hike by June. That has since went away, but it was being priced in there initially. If you start to get, more bad data or more hot economic data, bad inflation data, that could be a problem if the markets start to assign even a slight possibility of a rate hike. Tomorrow morning, we will be getting JOLTS job openings at 10 o'clock in the morning. This will be a big catalyst as well. Now, by this time, 10 o'clock in the morning tomorrow, you're already going to have Tesla's delivery number. Whether Tesla stock is going higher or lower, this can add to the bullishness or add to the bearishness. That's kind of the way that I would think about the data coming out tomorrow. So JOLTS job openings, imagine it like this. And I've said this before here on the channel, but I think it's important to kind of put this into context. If you are a restaurant, your local freaking Applebee's or whatever it is, and you're looking to hire maybe 5 employees, the Applebee's is probably doing good. It's probably, doing well. If you say, well, now we're only looking to hire 2 employees, Applebee's is probably still doing okay. If you are not looking to hire anyone anymore, and maybe last month you were, that's bad. So the JOLTS job openings is just telling you the amount of job openings out in the economy. Generally speaking, the more job openings, the better the economy is presumably doing, because businesses don't look to hire if their business is not doing well. So tomorrow's expectation is 8.74 million job openings. That would be down from 8.86 million job openings. If this were to fall big time, which you have seen big gyrations in this number before, that's not going to be great. Okay, that's good news for the Fed, but that would not be good for, the overall economy. That wouldn't be good for the markets if you see a big drop in job openings. So definitely keep your eye on that. You also have a lot of Fed speakers. Fed Bowman at 10:10 in the morning. These are all Eastern Standard Time. Noon for Fed Williams, around noon as well for Fed Mester, and then 1:30 p.m. for Fed Daily. And also keep in mind, the Fed got remarkably more bearish the last summary of economic projections. So the last Fed meeting you had, believe it or not, despite Powell's kind of full tilt bull speech that we got at 2:30 on March 20th, the dot plot actually showed less cuts in 2025, less cuts in 2026. They raised the longer run neutral rate estimates, and the lowest dot previously in December was 3.9% for the Fed funds rate by the end of 2024. That means the most dovish Fed official expected rates under 4% by the end of 2024. Now it's 4.4%. So even the most dovish Fed official is pretty close to where this 2024 projection came in for the Fed funds rate at about 4.6%. You're not getting 3 rate cuts in 2024. The Fed is going to push back on that a lot. Most Fed officials are probably going to say, yeah, it makes sense to cut rates once. Does that kind of eke into the markets? Do stocks react to any hawkish Fed commentary? I'm not sure, but also keep in mind, stocks are falling today, probably just an overall correction starting because Q1 was so strong. Q2 is probably not going to be as strong, and some people want to take their profits and run now. You can see on the NASDAQ on a technical basis, you have definitely broke under this trend line, and what's interesting is on Thursday, you were under this trend line. Well, take it back. On Wednesday, you found support at this trend line. At Tuesday and Monday of last week, you found support these 3 days. What happened? On Thursday, you fell under this trend line. You found resistance at this trend line, right? You were not able to get above that in the day. Not able to at all. You closed under that. Not great. Today, you tried to get above that trend line again. You got rejected. And you did get above the trend line a little bit for a brief moment of time. You got rejected. Stocks fell. So you're getting a clean break of this line. That sets you up for downside closer to about where this line is here, this median support level, around 438 on the triple Qs. Then after that, really, I would be targeting the 50 and then the 100-day moving average. And let's be honest, 5 to 7% correction is probably starting soon. And that likely comes via economic data that comes out. Maybe the data supports the economy is weakening, or earnings. Now, why, if the economy is weakening, would that be bad for stocks? Wouldn't that be good because the Fed could cut rates? And no, when the markets are this overvalued or this richly valued and they're pricing in just good news after good news, no chance of bad news. That's kind of how the markets are priced right now. If the consumer starts to lose their jobs, if there's not enough job openings, if the Friday jobs report shows a bad number, well, that's bad. Because the current thesis on Wall Street is if the economy stays strong, if the consumer continues to spend, S&P 500 earnings are going to grow 10 to 11% this year. If the consumer starts to weaken, especially sooner rather than later, and the data starts to show that, then maybe there's doubts that will come in at our earnings expectations. And the markets always want to see you beat earnings expectations. So on the broad S&P, expectations are around 245 or so. If we start to get indications they're not going to come in that high, then maybe the markets are even more expensive than we currently think. And that is a reason for downside or a correction as well. Also, like JP Morgan says, they expect a 20% crash essentially from here going back to October, November lows. I don't think that happens for no reason. JP Morgan says it can happen for no reason. I'm not in that camp. Yes, there's concentration. Yes, valuations are rich. But again, if that narrative continues to stay the same, the economy is doing fine, people are spending, earnings are going to come in, I think you need to wait until earnings, which start in about 2 weeks with the big banks, and then you'll have Tesla and other companies like Netflix in about 3 weeks from now. I think earnings are going to be a huge catalyst for our markets. Now, if we take a look at Tesla's Ortex data, I think the shorts are in a very vulnerable position right now if Tesla does give us good news. If the markets have priced in a really bad delivery number and Tesla stock does go higher, maybe Tesla gives us an explanation. They're going to focus more on profitability. Who knows? Well, the shorts are doubling down on their short positions. They have been for a long time. You have the highest short interest in Tesla stock in about 2 years at 3.71%. Doesn't sound like a lot, but that is $18.04 billion currently sold short in Tesla. Every $5, $7 move in Tesla stock higher costs the shorts almost $1 billion. That's kind of insane. You have 102.64 million shares that are currently sold short. And they've just been doubling down and adding to their positions, seems like week after week during the past few weeks. If shorts do not get burned tomorrow on Tesla, I think for sure they're going to get burned on Tesla coming on Tesla's earnings. So even though Tesla's chart may suggest the stock might fall tomorrow, I'm actually more optimistic than not because you're pricing in just so much bad news. If Tesla stock does fall big tomorrow, I will be buying as many shares as possible. I think you are within weeks, if not just a month or so, from Tesla giving you a serious rebound well into the 200s, and it may never come back down to these prices that it's currently at. After all, Tesla is solving full self-driving literally in front of our faces. The robotaxi network could be launching in 6 to 12 months at this rate of speed of progress. With FSD, I want as much exposure to Tesla as I can possibly get. Option activity from hedge funds and institutions, slightly more positive than negative. You do have 565 orders totaling $141 million with a positive order value of 54%. But take a look at this. Here on the day today, including retail investors, everyone, look at this. I think this proves exactly what I'm saying, like quite obviously. Calls, you have 42.83% of the total open interest, the total contracts that are held in people's brokerage accounts for this Friday, only 42.83% are calls. 57.2% are puts. There is more puts than calls for this week's expiration. Everyone is bearish. Usually, when everyone is bearish, the bearish outcome doesn't happen. And simply put, why that is, if you think about things logically, if everyone is bearish and they're betting on a bearish reaction in Tesla stock, who pays you out if you're bearish and you win? If everyone's bearish and they win, who pays that out? The bulls, the people that are wrong. So you usually don't have a small amount, a minority group paying out a majority group, because that just doesn't work. That means these small group of bulls got absolutely reamed, and the bears did very well. Whereas in contrast, if everyone is bearish but yet the stock moves up. That's why, in a simple analogy, why being a contrarian can make you a lot of money. Not always does it work, but if you're in the minority group that is betting on a bullish reaction when everyone is bearish, that means the bears may have to pay you out. And this more so goes towards options. And the reason I specifically reference this is because that's what happens. When the market makers are taking the back end of all of these contracts, they don't want the bears to win this week. They want the bulls to win. Because if the bears win, then they have to pay out a lot of money. They have to get into more leveraged positions in Tesla. That's typically not what market makers want to do. And you can also see here the put to call ratio is at the highest level it has been at since October of 2022. Over really the past, well, ever since about March 18th, the put to call ratio has been rising pretty much every single day, again, heading into this Q1 delivery number. And like Gary Black says today, if you don't listen to me, maybe you want, someone on Wall Street's opinion. Gary Black says Tesla reports Q1 deliveries tomorrow. Expectations are rock bottom. That's likely bullish. Gary Black says for Q1 deliveries, anything above last year's Q1 deliveries of 423,000 is positive. Troy Tesla's final Q1 estimate of 409,000 may set the bar low given the April 1st Model Y price increase of $1,000 that may have pulled deliveries into Q1 from Q2. Tesla will likely get a pass on the 30,000 year-over-year shortfall on one-time Model 3 Highland changeovers at Fremont. Tesla's IR-derived consensus is 431,000. So anything above 431,000, that would be really, really, really good. But honestly, anything like 420,000, slightly higher than that, I think is going to be really good as well. A number under 410 could be quite bad, but then again, the stock is down 30% in 2024. You have to imagine that's priced in. Like, that's not going to be a huge surprise to anyone if Tesla did come in at like 405,000 deliveries. But then again, there's always that chance that Tesla tells us tomorrow they're going to focus more on profitability than growing unit volumes. Again, not my base case, but I think, from a PR perspective, it would make a ton of sense to not wait until earnings to say that, but to actually say that tomorrow, to give investors a reason to buy Tesla stock. And honestly, to screw the shorts. The Elon I remember used to love to screw the shorts. Honestly, I do have an upside bias for tomorrow morning because everyone else is super bearish. Expectations are super low. I do have an upside bias for what's going to happen with Tesla stock, but would I be surprised if the stock sells off a little bit, another 2% or so? Not really. Would I be surprised if Tesla goes up about 2%? Not really. Any kind of large outsized move tomorrow will be shocking. I mean, especially like a 5 to 10% down move, that would really be shocking. That would be a, sell your kidney kind of moment, in my personal opinion, to get as many shares as possible in Tesla. But I'm honestly expecting an upside move tomorrow. But then again, we do have JOLTS job openings and we do hear from quite a few Fed speakers as well. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. Thank you for watching. If you guys want to come join the trading community, check that link out down below in the description of this video as well. You guys have a fantastic rest of your day, and I will see you in the next one.